We are in April and we will book our invoices from our vendors through accounts payable. This is the last month when we'll do it through accounts payable. Going forward in the following months, we'll show you other ways to book the same transaction and bypassing accounts payable. There's a lot of interesting ways that you can do it. Some of you are familiar with those ways through our food truck simulation. Again, it's important to know the software you operate, therefore we'll show you different ways to do it. Anyway, let's get to it. Let's book those invoices. I'm gonna enter bills. This one is from DeCre Properties. Alright, we're gonna enter invoice number right here. $6,000. Alright, on receipt. Ta-da, rent. Oh no, it's not deposit. Expense. Okay. Debits and credits, what's happening? Well, we're not paying it yet, we're just entering. So it's going to impact accounts payable. Accounts payable will go up. Accounts payable is a liability. Liabilities go up when credited. What else is happening? Our expense on rent goes up. Expenses go up when debited. Thus, this is a debit to account 67,100, and this amount right here is a credit to account 20,000. Oh, accounts payable. Right here, so saving you. Next, we have utilities. That's utilities. So here again, accounts payable is impacted. Expenses go up, that's a debit. Accounts payable goes up, that's a credit to 20,000. This is a debit to 67,600. All right. Any services? All right. So again, this one is keep it clean. Janitorial services. So again, we just change it here, 672. All right, 380. 380. Okay. So this is debit to 67,200. This is credit to 20,000. Accounts payable goes up. Expenses go up. We're not paying him yet, so our cash is not touched. But when we do pay those bills, we will not touch the expense account. Just want to reiterate it as people ask me sometimes. Okay, insurance. So here we get to break it down a bit. Spread of power. Debits credits interface. So insurance for all. 4, 5, 5. Number right. 9,400. Alright, well, what do we have here? We have workman's compensation insurance. We have health insurance, 6375. And we have dental insurance. All right, so let's show what's going on. Well, first of all, our accounts payable will be increased by $9,410. Why? We owe money. So liabilities go up. To liabilities to go up, they have to be credited. And then we have all these expenses that roll up to insurance expense, right? But let's detail them. 86,375,2755. There it is. Debits and credits are in balances. Each one of this is a debit to 63,370. This is a debit to 63,320. This is a debit to 63,360. This is a credit to account 20,000, even though we don't see it here. It is there. It's accounts payable. It's a setup inside QuickBooks. All right. Date is correct, everything is correct, saving you. Then we have postage for 5 reference. $5 again. It is a prepaid expense. Technically, we could book it as an asset, but because it is such insignificant, we're unlikely to get refunded. If we do, we can reduce our expenses. We book it as expense right away. So this amount right here, 45, is a debit to account 61,600, and this amount right here is a credit to accounts payable account 20,000. All right, save and new. What do we have here? We have the computer and internet expense of 175. We have security of 75, and we have phone. Telephone expense of $85. So we can just show it all right here. 335. 61, 400, 67, 400, 67, 300. 75, 75, 85. There it is. So $85 right here, it's a debit to account 67,300. $75 is a debit to account 67,400, and $175 is a debit to account 61,400. This total is a credit to account 20,000, which is our accounts payable. Saving you. All right, last one is mobile services. All right, telephone expense right here. Pretty straightforward. There it is. All right. So this amount right here is a debit to account 67,300. This amount right here is a credit to account 20,000. 20,000 is our accounts payable. It is a liability. Liabilities go up when credited. Makes sense. We owe more money. Our expenses go up when debited, right? 67,300 is an expense account. Thus it goes up. Our telephone expenses are increased. That's it for entering our bills. All right, so what do we have next? We have a credit memo from health insurance. So here I stayed in the interface because again I want to show you, just like when with credit cards, all we have to do is switch this, right? So right now this window right here serves as a credit to accounts payable. Once we click it, this becomes a debit even though it says credit. That's the counterintuitive part. Never believe the labels, right? People, well, yeah, it says credit because it's a credit memo. The truth is, I'll show you right, that 75 will be debit. This will be debit to account 20,000, right? Some of you've seen it with bank statements too. Sure, we'll talk about it. But anyway, you have to know your debits and credit. You have to. All right, so this one, health insurance expenses reduced by 75. So what's happening here? Well, our accounts payable got just reduced by $75, right? We don't have to pay it, so that will be subtracted from our bill, so our accounts payable is reduced. Because again, those credit memos, they serve just like payments. And our expenses will be reduced as well because, you know, we thought we had so much money expense on health insurance, but then we got a break and it turns out we spent $75 less. Again, this window right here, don't get misguided by the word credit amount. It is a credit memo. But this window serves as a debit to account 20,000 accounts payable. It debits it. All right, that's why it's important to know your debits and credit. And then this amount is a credit to your expense account, 63,320. All right, so that concludes invoices and credit memos. Save and close. And then now we're just going to pay those invoices. So at this point, we will not be touching expense accounts. We'll be touching our 10,100, our general bank account, and we'll be touching our accounts payable. That's it. That's it, really. Okay, let's go ahead and pay our April invoices. First, we have our invoice for DeCre properties, so we're gonna go and pay bills. Here it is, DeCre properties. All right, so again, make sure we pick the correct date for 8/21. 21. Okay, check. All right. General account to be printed or assigned check numbers. Let's do it both ways. All right. In this case, let's say we want to assign check number. Doesn't really matter. What's important is accounts that are being debited and credited. So one account we see right here. That's our bank account, right? And when we pay liabilities with our bank account, we know that it's going to be reduced, right? Because we use the funds in that account to pay down our debt. Therefore, it has to be credited because bank account is an asset, and assets have to be credited to be reduced. So here it is, $6,000. Now, what else? Involved in this transaction? Well, we got to have debits, one way or another equals $6,000. And in this case, it's our accounts payable. Accounts payable is going to be reduced. So here it is, right? It's reduced. You don't see it here, but it is implied in this QuickBooks. And we can run reports to validate it, but trust me on this one, that's the setup. 20,000, that's account 20,000, accounts payable. We booked into it, right, when we booked those expenses. However, now that we're paying those expenses, we're not touching the expense accounts, right? You'll have to go back a little bit, rewind, and see when we're impacting the expense accounts. Now, the action of paying the invoices involves only these two accounts. It involves accounts payable. It always will be debited by various amounts, and our bank account, which we use to pay it, right? And that in this case will be credited because it's an asset. It will produce. So here it is, right? That's the transaction. All right, let's go ahead and pay it. Selected bill. All right, this 6,000 right here. It will become debit to 20,000 and credit to 10,100. So pay selected bill. In this case, we will assign check number. So here it is. It's asking us for check number 1024. All right. So here it is. Done. All right. So there it is. We can pay more, but again, this 6,000 right here, it is a debit to account 20,000 and a credit to account 10,100. However, only account 10,100 is shown here. That's the feature of QuickBooks, not a big deal as long as we know. Let's pay more bills. Next we have keep it clean. In this case, let's just mix it up and make sure you change the date. Alright, oh no, that's the utilities here. Keep it clean. Date is 10. Alright, so in this case, let's print it. Right, again, the impact will be identical, like I said. The only thing that we change at this point is the amount, right? But again, to show you, let's print that check. Pay selected bill. Alright, so here it is, the 380. 380 will become debit to 20,000 and credit to 10,100. Alright, print checks. Here it is, the date, right? Printing it. All right, check. We'll have to double check that one. 10,026. Okay. All right. It's all good. We'll check the check once it prints. Okay, here it is. It's printed, and the amount is 380, right? It's a debit to account 20,000 because 20,000 is a liability, it's accounts payable, and liabilities are reduced when debited. And it is a credit to account 10,100, which is our bank account, and bank account is an asset and it is reduced when credited. And that's what is happening, right? Once we mail that check to our vendor and they cash it, the balance in our bank account will be reduced. All right. And again, let's just go back and show you. So here it is, that's our payroll account. Make sure you have our bank account selected. All right, and let's just go back. That was 1026. So here it is, right? You see this check right here, and from our previous examples, and again, we'll demonstrate in future how to. In May, we will bypass accounts payable, but still we'll write checks directly. But still, here, this 380 right here, it is a credit to account 10,100, and this amount right here is a debit to account 20,000, even though it's not shown. It is part of the deal, right? Because that's how QuickBooks is set up. Again, as long as we know our debits and credits. All right, close. So let's continue paying bills. Next one, insurance for all. Where is that one? Here it is. All right, on this one you can see the difference, right? We have a total, but then we had a credit memo, if you remember, that we posted. So let's make sure we do that. Once you click it, right, here you have an option, right? You have an option to set this credit right here and therefore reduce this amount. And that's what we did, why not, right? So set the credit. Let's set that. All right, and it's asking us, do you want to apply it? Yes. All right, because credit is already there, right? Credit, what did credit do? If you rewind back, it reduced expenses, reduced accounts payable. Now it's just this impact right here does not impact debits and credits per se, just assigns it to that specific area. Okay, and so here it is showing up, and we're going to go ahead and pay it. All right, so in this case, again, we're paying 9,335. The reason is that we posted a credit memo that reduced accounts payable, so simply 9,410 is no longer in that accounts payable, right? It was reduced by $75, and therefore the amount in accounts payable associated with this vendor is $9,335. So here it is. Let's pick correct date. All right, let's say we're gonna assign check number. I'll show you how to print it. It's not much difference, but here it is. All right, so once we pay it, right, this amount, 9,335, here it is, right, because again, this was the original, remember, this was the original credit to 20,000, then we debited with credit memo 75 to 20,000, and we're going to make another debit to 20,000. Therefore, combination of this credit and this debit will completely remove accounts payable. It will bring it to zero for that specific vendor. All right, let's continue. Pay selected, check number 1027. Here it is. All right, so again, this amount right here, let me assign check numbers. This amount right here will be credit to account 10,100. We can see that account 10,100 is an asset. It will be reduced when credited, right? And at the same time, this amount will reduce liability, 20,000. Liabilities are reduced when debited. So here it is. All right. Okay. Here it is, right? Again. But they're only showing us 10,100. That's fine, as long as we know what's happening. Pay more bills. All right, we have a few more. We have postage solutions. Here it is. 412 check. Let's assign. Again, the only thing that changes from now on is the amount. Kind of covered that. Let's go do that. Check number 1028. Okay, here it is, 45 right here, right? What is it? It's credit to 10,100, and it is a debit to 20,000. Again, just a reminder, and I know you've heard me 1,000 times on this. At this point, when we're paying bills that we previously entered through accounts payable, we're not impacting expense accounts. Those were impacted when we booked the bills. Now the only two accounts, as you've noticed, are impacted is our bank account, 10,100, and our accounts payable account, 20,000. So here it is. The only thing that changes is the amount. Here it is. And let's make sure we do the date. Alright, and oh, it 25. Okay. Same thing, right? Credit to 10,100, debit to 20,000. Bills, payment for services, and we have cable. All right, let's do that. Just do left. All right, 426. Just the only thing that changes at this point is the amount, right? Because down, we're reducing liabilities, 20,000, and we reduce liabilities by paying it out of our bank account, 10,100. So both accounts are therefore reduced, but one is liability, therefore it's reduced by debits, and the other is an asset, and therefore it is reduced by credits. Okay. Last one. There it is. Oh, let's print this one for kicks and giggles. Right? It doesn't matter who you print it. It's to show that regardless of how we do it, we know how to do it. Okay, just assign the correct check number. Okay, here it is, right? So it printed, all is good. This amount right here, right? What it is. It is a credit to 10,100 and debit to 20,000. And we can validate it by going to our check module right here, switching to our general account. Okay. And looking at this bill, at this check, right? So here it is, this amount right here that we just booked, what it is, it's credit to account 10,100. We can see that right here, right? And it is a debit to account 20,000, which we cannot see, but it is here, right? Because we booked into it and now it's accounts payable module. All right, so we're going to close this one. That concludes, booking and paying invoices for April. Next, we have reconciliation.